Live from Reserve Bank of India, RBI Governor talking to media.
To the senior management of banks and the NBFCs. And I am very happy in this context to note that some of the CEOs of our banks are also present here. The CEO of IBA is also present here. Now, the theme of the conference, keeping the financial system resilient, future ready and crisis immune, is one which will never lose relevance, no matter which side of the economic cycle we are in. In fact, the ethos of being future ready and resilient against crisis needs to be built into every financial institution. It has to become a key element of their organizational culture and ethos. It has to be developed proactively when the system is healthy, rather than reactively when there may not be enough headroom to strategize. And now there has been talk of late about whether supervisors world over have fallen behind the cycle. And the talk has started, the discussions have started in various fora, in various international fora in which I get opportunities to participate, including the International Monetary Fund, the BIS and other institutions. With the failure of a few banks in the United States, with the failure of the giant Credit Suisse, which has been there, I mean, it was one of the leading institutions in the world, in not only in Europe but in the world. Now, supervisors all over the world have suddenly, there is a sudden sort of renewed interest, and questions are being asked whether the supervisors acted in time or whether they fell behind. The US Fed has done an analysis with regard to the failure of the banks, the 3 or 4 banks which happened in the United States, and they provided an excellent analysis of what exactly happened and why it built up. One gets a sense, I am not specifically saying with regard to the United States, because I don't have all the internal details which the regulators and supervisors should be having there. So I am not saying in the context of what happened in the US or in Switzerland, but generally I am speaking. One aspect is that the supervisor should be absolutely in sync with or ahead in judging a build-up of a crisis, build-up of a stress. The supervisor should have that capacity. The other element which is equally or perhaps more important is timely intervention. It's not enough that we know that there is a problem building up. It is absolutely necessary that we act in time. There could be a problem where in countries where the supervisors are a different entity, but the institutions which will enforce and take the proactive measures or the regulatory powers are vested in another organization, in another institution. So there is need for close coordination between the two. That is also very important. Fortunately in India, given that Reserve Bank is a full service central bank, both regulation and supervision and several other aspects of the financial sector and the financial markets, the money markets, they are vested with the Reserve Bank. So as a result, the Reserve Bank has the unique advantage and it is uniquely placed to use the various arms of the central bank, that is Reserve Bank, and to deal with a crisis. Examples of fixing the problems in, let us say, the Yes Bank, which happened in 2020, right through end of second half of 2018 and 2019, we saw that there was a problem building up. We tried our best through various other methods to act. The supervisors, the Department of Supervision, Department of Regulation, all other departments were very active and closely coordinating and trying to deal with the crisis, the build-up of the crisis. And when it became necessary, naturally both supervision wing of Reserve Bank and the regulatory wing of Reserve Bank, that is the Department of Regulation and the Department of Supervision, and of course the legal department, because they had an important role to see that what we are doing is legally right. So therefore, I think there are advantages in having all these functions in one organization. There are counter arguments to it also. I am not going into the details of the counter arguments. Maybe a different matrix in another country can work better. I mean, it is for them to take a call on their their country situations, because circumstances, the overall environment and so many other factors vary from country to country. Each country has to choose its own method. But in our experience, I think having all this vested in the Indian Central Bank, that is the Reserve Bank of India, has been of immense use. So that is one point which I would like to highlight. And I mentioned that there has been debate that has supervision fallen behind the crisis. So, but again, as Dr. Ravi Mishra pointed out, and as you would be discussing perhaps in one or two of the subsequent sessions, we started this entire exercise of trying to be as proactive as possible. I cannot afford to say that we are smelling a crisis on every occasion, but it is our endeavor to smell a crisis, because we can make best effort on best effort basis. It is our endeavor, and it is at the forefront. It's at the forefront of our agenda. It's at the back of our mind all the time, to see if something is building up either at the systemic level or in an individual institution, in an individual organization. And today, in today's world, given the complexities that we have, a stress can originate from multiple sources. It can originate from certain factors within an organization, within a bank, or within a financial entity, or within a NBFC, that is a non-banking financial company, that's a non-banking lender. It can originate because of certain deficiencies within the organization. It can originate from a very small problem in some corner of the balance sheet of a financial institution, which the management may think it's something, doesn't merit great attention, but it can suddenly build up. Or it can take place due to external factors. It can take place because of climate issues. It can take place because of business cycle change. It can take place at times, if there is even monetary policy also, if it's not keeping in sync with how the economy is moving, it can potentially create a crisis. It can also come because of some technology outages, and technology outages can be due to your own internal problems. Your IT system has failed, or in the larger scheme of things, if there is a failure at the other end, then it hits you also. A crisis can also come from a fraud, if it remains undetected, and if it is allowed to remain and persist far too long. So therefore, I think supervision has become a very complex task. Among the younger lot who are present here, I am not scaring you. It's not that difficult, but it is complex, and we need to realize that it is a complex world, and our supervisory methods should be our best endeavor to remain in sync with times, not only in sync with times, but also to see the stress before it builds up, and to take proactive measures. Last year on November 16th, we imposed certain regulatory macroprudential restrictions on unsecured retail lending, on bank lending to NBFCs, and on a few other aspects. Because we saw that in the credit market, some potential problem would have built up. There was the headline numbers were looking good, the parameters were looking good, even now they are all right, there is no problem. But we thought, please mark my words, we thought if left unattended, these aspects, these vulnerabilities can become a bigger problem. So we thought it is better to act in advance and slow down the credit growth which was happening in these segments, because we could clearly see some evidence of dilution of underwriting standards, some evidence of proper appraisal not being done, but the mentality to join the bandwagon and sort of just go